Joining us now for the Kenya market update is Jeffrey Maina, who is research analyst at Old Mutual Securities, talking to us from Nairobi. Good morning to you, Jeffrey. Perhaps just give us an overview of the market before we look in particular at that bond sale, which has affected the shilling, and a couple of points on inflation. But overall, what's the market been doing?
We've seen, thank you, David. We've seen yesterday the market began the week on a positive note. With the Nairobi Securities All Exchange 20, NSE 20, ending the session at 47.63 mark. This was remarkable improvement given that last week, most of the trading session, it was a bit sluggish following the attack on Westgate. But this week, we've seen the market improving quite remarkably. And also yesterday we saw EABL improving to all-time highs, ending the session at 329 shillings. And also Safaricom during yesterday's session traded at highs of 8 shillings and 70 cents, but ended the session at 8 shillings and 50 cents. So overall, there's improved market optimism, and going forward for the rest of the week, we hope this trend will continue.
What about the opinions on tourism? The view was that that would be the sector most hit by that terrorist attack. Has that opinion been revised a little in the light of, as the situation has calmed, the crisis ended? Are people still saying that tourism is going to be hit so hard?
From what we are getting from the Ministry of Tourism, the government is saying that at least they're happy with the European Union didn't issue travel advisories to Kenya. It's only the United States which cautioned its citizens against traveling into Nairobi. But the overall optimism is, the overall feel is the industry will not be hard hit. And even the hotel bookings, we've not had any news that the hotels are complaining that they've been hit with reserved booking cancellation. So the economy is quite resilient, and we hope even the tourism sector is going to come out strong and also record increased tourist numbers.
Yeah, well, certainly that sounds more positive than it did immediately after that attack, and that's good. Then there was the bond sale last week, which supported the currency. Apart from that bond sale, did the currency react to the terrorist attack? Because we talked more about the effect on the economy broadly, but often the currency is a barometer of sentiment.
Yeah. Last week, the currency was slightly hit following the attack, but it has received a massive boost from the sale of the 12-year bond. We've seen increased inflows, dollar inflows, and this has really helped the Kenya shillings to be able to stand and to trade at the 87 mark to the dollar. The sale, from what we've heard from the Treasury, is the government was targeting to raise 20 billion, but they ended up getting bids, offers amounting to 37 billion, showing that the infrastructure bond received massive support, given at the rate that they were offering at 12.3%. So the shilling has really benefited from that sale, and we are continuing from yesterday's. We are continuing to see increased dollar inflows as investors continue to make payments for that bond paper.
Looking at the inflation rate, I see Kenya forecast to register annual average inflation of 6.3% this year compared to 9.6% last year. But on the short-term inflation measure, up to 8.2% in September from 6.6% in August. VAT measures and food prices, that's quite a big jump.
Yeah, exactly. The jump, it didn't come as a shocker. Following the introduction of VAT on zero-rated and exempt goods, this was highly expected that the inflation for September is good. It was going to jump massively. And from what the Kenya National Bureau of Statistics gave out yesterday, we see the inflation figures for September are at 8.3%. However, the government, they're projecting that their full-year inflation position will be at around 6.3%. But going ahead, I think, in my opinion, it's going to be a challenge to them to achieve that mark, following the introduction and the introduction of the VAT expanding the amount of goods that are going to be taxable. We see from the increase, the food and non-alcoholic beverages, they were hard hit. Their prices increased by over 3%, and given that they contribute over 36% of the consumption basket. So, I mean, it's going to be a challenge for the government to achieve their target for the year. We've seen, just to give confidence in the consumers, the Treasury last week, in conjunction with Kenya Revenue Authority, they tried to clarify the impact of the new VAT bill. And also they carried out some raids on some traders who are using the new bill to charge consumers excessively. Some traders increased their prices to over more than 20%, and they were only supposed to account for the 16% increase. So from such measures, and also from going forward, from the clarification you're going to receive from the government on how the intended how the VAT bill was intended to be implemented, and what was the intended objective for that bill, it's going maybe to cushion the market. But overall, achieving their 6.3 target for the year, I think it's going to be a long shot.